The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes and everything tax related, because we want you to get the biggest refund possible, and if you owe money, how to reduce your liability. And as normal, Tiffany and Chris and I switch off every week, and today's Chris's week. And so Chris, hey, thanks for being here.
Hello, Esther.
Hey, Chris. All right. So, again, we have all of our offices open, 31 area offices. We have offices in Florida and Arizona. If you have tax questions, people call us all day long with tax questions. We have real people answering real phone calls. We want to help you. 803-0930 is our phone number here in the studio. 803-0930. Star 930 on a cell phone. You can text us at 716-803-0930 because we want to help you. And today our subject matter, and you can talk about anything you want tax related. And especially, I've had a lot of people this week that have said to me that they are waiting on amended returns. Amended returns have to be manually processed. The IRS is very far behind in those. And what I'm suggesting is if you don't have the money by the end of this tax season, call us at our corporate headquarters here at EG Tax, and we have a practitioner hotline to call, and we can follow up and find out where those amended returns are. But this year, right now, everything's in full swing. All of our offices are open. Our corporate office is open 9 to 9. Most of our offices are open 9 to 9. Some of our smaller offices are open in restricted times, and I will just be frank with you, it's because we're having trouble getting support staff, not tax accountants, but support staff. Somebody to answer the phone, somebody to make the coffee. Nobody wants to work. I bet you're not surprised at that. So anyway, our subject today is itemized deductions, and a lot of people don't even realize that you may not be able to itemize on the federal, but then again, you might be able to. And if you do, you save money, and that's the whole thing. But the state of New York also will allow you many of the deductions that the federal government won't allow you to deduct. And so we wanted to talk about that as well. I'm Esther Gulius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. Okay, so itemizing, Chris. Why would you want to itemize?
Save some money.
Right. So the federal government and the state of New York, by the same token, will allow you a standard deduction. But if your itemized deductions, the things you're listing that they're allowing you to write off, is more than the standard deduction, then you save money.
Right. And depending on your tax bracket, depends on how much you save. Like, I was talking to somebody yesterday who's going to be in the 24 or 32% bracket next year, and they're like, I don't know, is it worth it to buy a house? What's the advantage on the tax return? And I said, well, you take your interest rate, your interest you pay, multiply it by that percentage, and that's what you save.
Right, and that's federal and state.
Right.
So if you're in the 24% bracket federal, 6% state, 30%. So something that's extra $2,000 off the standard deduction saves you $600.
Right.
Now, compared to some of the credits that we're doing this year, $600 doesn't sound like a lot of money unless you're somebody that's going to get an extra $600, and then it all pays off, right?
Right.
So there's basically, these are the categories: medical, we're going to talk about medical, taxes, interest, and it's primarily on mortgage and investment interest, charitable deductions, casualty loss and theft losses, and I think people forget theft losses kind of got put in the weeds, but those are all deductible, and miscellaneous itemized deduction. And some of these are not deductible on the federal, some of them are deductible on the federal, and many of them, if not all of them, are deductible on the state.
Right,
Okay?
right.
And we're going to talk about that. But in the meantime, 8030930, 8030930, star 930 on a cell phone. You can text us at 716 8030930, and we're going to go to Ron in Cheektowaga. Hey, Ron, how can we help you, sir?
Yes, my brother recently passed away, and trying to go through his paperwork, it looks like he may not have filed taxes for the last year or two, and I'm trying to find out if there's a way of, 'cause I haven't found like any W-2 forms or any of that kind of stuff at his house. And I guess I need to file the taxes or the state.
All right, we have access to the database that the IRS has, so we can look at transcripts. But was he working before he passed away?
Yes, he was.
All right, so if you are not...
Are you the court-appointed representative?
I was going to say, and
Yes.
and if you are a court-appointed representative, we can get those wage statements so that you can file a tax return and attach a Form 1310 if there's a refund due. But that's something we're very happy to help you with.
Okay. So what I do, just call your office then, and you would try and get the transcripts, or how would
Are you court-appointed already, Ron?
Yes, I am.
Okay.
Yeah, you can call our office. The best thing would probably be, because we don't know how long the hold time is, we could schedule you a phone appointment and you could sit on hold with us, and then we can do everything over the phone, but we would need everything, the court-appointed paperwork sent over to us so we can get that to the IRS when you're on the phone with them.
Okay.
Okay?
Okay.
Thanks, Ron.
Okay. Thanks.
Sorry about your loss.
And really, one of the biggest areas of, you don't get good at dealing with decedents very often. It is in the area of inheriting property and being the executor of an estate. And that's something that EG Tax can help you with.
Definitely, definitely. And it's really hard talking to the IRS about a decedent because they're very meticulous who they talk to. And, even if it's a surviving spouse, they want proof of that too. So
Right, because with all the fraud.
Yep.
With all the fraud. Okay, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. Let's go to the phones and we'll talk to Kevin. Hey, Kev, how can we help you, sir?
Hi, Esther. I'm 62. I have about 30 grand in my 401. It's been coming down. I'm short about $500 every month of my bills. Tell me how reverse mortgage would help me, and tell me what is a reverse mortgage.
Okay, well, a reverse mortgage, basically, let me go back and ask you, how much is your house worth, would you say?
About 80.
And how much do you owe on it?
I only owe 20 left.
Okay. So a reverse mortgage basically takes the equity that you have in your house, the $60,000, and pays you back like you're the bank. And they pay you that as tax-free money and it is not based upon your credit. However, there are a lot of fees attached to a reverse mortgage, and I would suggest before you do a reverse mortgage that you look hard and long at the expenses of the reverse mortgage. You being 62, you're just now at the beginning part of being qualified for a reverse mortgage because you're so young. And I will tell you, they will pay off your first mortgage for you, the $20,000, and they will give you the equity per month or per year or however you want it, or all up front. But the thing is, that's got to last you a long time. And I think maybe if you have $30,000 in a pension plan, and you might want to look at, since you're saying, are you working right now?
No, I'm retired. I had 100,000, but as the years go down, I'm having to take some out.
Well, I would wait as long as I could to do the reverse mortgage, quite frankly.
And And small.
older you are, the more equity they will give you out at a faster pace. So that's something to look at. But if you want to chat, you can call me at the office at 632-7886. We can talk about a reverse mortgage, but there are some pretty hefty fees attached to that reverse mortgage.
To talk to you about that. I'll make an appointment.
All right. Thanks, Kevin.
Thanks, Esther.
All right. That is an option, and what people don't realize is that money comes out tax-free.
Right. But, another thing, and I know a lot of people don't like the idea, but maybe he might want to consider selling his house and renting because he's still paying mortgage, he's still paying property taxes. So would it be better for him to rent?
And that's why I really wanted to talk to him, because I want to look at what he's got left. And you talk about selling your house and people go, oh, no, but this is like the best time ever, because he could sell the house and not pay any taxes, right?
Right, yeah.
I'm Esther Gilius, the tax lady from EG Tax. We're going to take a short break. We'll be back on the other side. 8030930, 8030930, star 930 on your cell phone with your questions. Hey, to us, you are family. And so, family, we want to help you with your taxes, right? I'm Esther Gilius, the tax lady. You can go to our website at egtax.com. There's all kinds of information on there. You can make appointments. We have a portal to send up your information. We're doing lots of remote taxes this year, and people are loving it,
Yeah,
And
it's a
we
nice...
certainly want to help as well. Okay, let's go to some of these texts. What have we got?
Sure. If I bought cryptocurrency this past year but never sold it, do I need to report it on my taxes? From what I'm reading, I only will have to do that when I sell it.
Which is correct.
Correct.
Right? What you have to realize, though, when you sell cryptocurrency, what you paid for it versus what you sold it for is a capital gain. So you have to keep track of that basis. So, and the IRS is following cryptocurrency very tightly.
Right. And don't forget, too, if you use it to purchase stuff, that counts as a Schedule C, as a self-employed individual. And so you have to pay self-employment tax on that gain as well. So you're going to pay ordinary income, not capital gains, and self-employment tax. So if you're in the 22% bracket, you now have to pay basically 40% to the federal government of
on
that
the gain.
Yep.
Right. Absolutely. Okay, let's go back to the phones. We're going to talk to Mark. Hey, Mark, how can we help you, sir?
Hi, Esther. Last year I had a walk-in shower installed at the advice of my doctor. I got a letter from him that it was medically necessary because I'm classed as disabled. I'm 68 years old. And I want to know what kind of tax write-off that is.
Okay, that fits right into me talking about itemized deductions. Well, that's an itemized deduction. So whenever you have a medical condition and the doctor prescribes a capital improvement to help you to alleviate the problem, that is potentially a large deduction. However, what you need to do is you need to figure out what the house was worth prior to the walk-in shower stall and how much the house appreciated after the shower stall. Now, let's say that you have it appraised and the realtor says to you, well, really, we don't think that it improved the marketability of the house at all because it's cumbersome. Some of these shower stalls that are walk-in, they aren't as aesthetically pleasing as another remodeling project. So if they say there was no increase, and let's say that the shower stall cost $10,000, then you'd end up with a $10,000 medical deduction, to which you can add all of your other medical expenses, which would be things like, what, Chris?
Like your doctor visits, your prescriptions, your dental, your vision,
medical travel.
Medical travel.
Your insurance,
yep.
Right? Medicare that you're
supplementary insurance.
Right.
Lab fees.
Right. Ambulances, hospital, nurses, trusses, braces, crutches, all those kind of things would all get added together in one lump sum. And then you have to reduce that answer by 7.5% of your adjusted gross income. and after you take that off, that's the amount that'll be your medical expense.
Okay, with that
Does
whole,
that help, Mark?
I'm going to get a whole house generator installed this year because I'm on a BiPAP machine, and I have to have the BiPAP at all times when I'm sleeping, whether it's a nap or sleeping.
Again, that would have to be something prescribed by the doctor, and the same procedure that we talked about for the walk-in tub would be the same thing you need for a generator. Now, I would think because a generator is not an aesthetic thing, but is really something that's very utilitarian, that it probably did increase the value of the house. So you have to find out how much it increases the value. It obviously, if you're doing medical, it makes a lot of sense to try to load up all of those medical expenses in 1 year as possible to get the biggest bang for your buck.
Yep,
Right, Chris?
I would totally agree.
Okay, Mark?
And I would tell your viewers that last year I filed an amended return, and it takes months to get your money.
And months. And months.
Yeah. Yeah.
Right? Thanks, Mark.
Yeah, I know.
Yeah.
When I called the IRS, they said, well, we know we usually say 4 months, but you got to give us 6 to 8 months now to do an amended return.
Right. It's tough. I mean, really, and people that come in and say, now I'm filing, when will I get this money? Especially if they say that they haven't gotten the $1,400 stimulus. I say, look, before we put that application on for $1,400 that you say you didn't get, understand that if this is incorrect, they could hold it up for months while they're manually checking it. So be sure that if you're putting that extra stimulus payment down that you say you didn't get, go through your bank account first.
Yep. I'd say 95% of my clients who say they didn't get it, and I
They
have
got
them.
it.
Yep.
Yeah, that's true. That's absolutely true.
Should we
So when
do-
I say to them, so if you don't care about waiting for 6, no, well, let me go through my bank account. All right, we got another text here.
Yep. Is it true that you cannot claim the real estate tax credit, $250 to $350, for New York State if you make more than $18,000?
No, that's not true.
You're mixing up two
Two
forms.
different credits.
Yep.
There is the
IT 214.
right, which is a property tax credit, and this is another kind of property tax credit. One is an IT 214, the other one is a New York 229.
Right. The 214, really where I've seen it come into play, we usually call it the renter's credit
Right.
because it also could tie into people who pay rent.
Right.
Okay. This one, the 229, is strictly for homeowners, and that's for people who make up to less than $250,000.
Right. Correct. And your property taxes are more than 6% of your adjusted gross income. Then if that's the case, then you can go ahead and do the computation. So then they figure out the difference between what the property taxes that you're actually paying and the 6%. They subtract it. Whatever the spread is, they multiply it by, I think, 16%. That would be the amount that you'd save. And if it doesn't rise to $250, you get nothing. You have to fall between the $250 and the $350, and $350 is the max. So the one is the New York 229, and the other one is the
IT 214.
214. Okay.
Yep.
All right, and then let's do one more here. My son goes to UB Honors College, lives on campus, and this is the first year he has to file taxes. What should we do? First of all, you want to make sure that just because he's filing a tax return, don't think that you can't claim him as a dependent on your return, right?
Right. If he's in his first 4 years of college, so that you would want to claim him because there could be up to a $2,500 credit that you're entitled to on the federal. So first $1,500 is non-refundable, where the last $1,000 is refundable, where if you let him claim this credit, he wouldn't be eligible for the $1,000 refundable credit.
Right, absolutely. And a lot of times that's what will happen is they'll say, well, my kid just made $8,000 working at Wegmans, so I can't claim him. That's not true. You, regardless, as long as you're furnishing over 50% of the cost of the child, you can still claim him out of the return. The kid's going to get all of his money back if it's $8,000 from Wegmans. On the state of New York, it probably have a small balance too. But you can save on the first 4 years of of his higher education, you can save up to $2,500 in the federal, up to $400 on New York State. That's $2,900.
And not forget the $500 other dependent
Right,
credit
absolutely.
on the
so
federal
that's
too.
$3,400. So you want to make sure that you claim your child.
Right.
Right?
Right.
Okay, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And we got John on the phone from Grand Island. Hey, John.
Medical insurance premiums, long-term care insurance premiums. What's the limit that can be deducted in as I itemize medical expenses?
Well, your health insurance cost is totally 100% counting as medical. The long-term care depends on your age. How old are you?
85.
Yeah, so you're going to get the maximum,
maximum.
which is about 3,000 off the top of my head. It's like 3,560, something like that. But the thing to remember too is that's going to be a credit on New York return as well. And if you don't need it, it's a carry forward credit for years and years. So if you hit the lottery,
You're all set on
you're
New
all
York?
set on New York. You won't have to pay them money.
What I've been doing, I've got quite an accumulation.
Right.
Yep.
Okay?
Well, I still don't know the amount.
Okay, well,
The limit.
we got to take a break for the news.
And then we'll look up the exact figure. We don't, as much as we would like to say that we know all figures by heart, we don't because they keep changing them. So we'll look it up during the break. We're going to take a break for the news anyway, and then listen, and we'll tell you on the other side, John, okay?
So I don't have to hang on the phone.
No.
We'll say
listen,
it over the
we're
radio.
We're going to say, John, this is how much, okay?
Okay.
All right, good enough. Anyway, I'm Esther Golias, the tax lady from EG Tax. We love to help you. We want to help you. Give us a call so that on the other side of the news, we can help you with your questions. 8030930, 8030930, star 930 on the cell phone. See you in a minute. Hey, to us, you are family. I'm Esther Golias, the tax lady, and we want to help you with your taxes so that you don't overpay. Our phone number here in studio, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And Chris, you looked up that for John in Grand Island.
I know a lot of people think we're like robots or computers with our tax knowledge, but we have something attached to us that is our lovely phones. And that figure, John, is $5,640 if you're 71 or more. So this amount goes on your medical, and it depends on your age. So you said you were in your 80s, so you get the max, which is $5,640, or what you spend up to it. So if you only spend $4,000 a year, you get $4,000 credit.
Right.
Where somebody age 51 to 60 who spends that exact same $4,000 a year can only claim $1,690 as a medical
Deduction.
write-off
Yep.
on your Schedule A.
Right. So to clarify what Chris is saying and what John was talking about, if you have long-term care insurance, it works like a medical expense, but they phase it in based upon your age. And the other important feature to know is that transforms, that carries forward to the state of New York as a credit. And if you don't use it, it just keeps stockpiling.
Right. And I've seen it, people who had rental properties where it really paid off.
In the when they went
When
to
they
sell.
sell it. Yep.
Because on the state of New York, there is no capital gain benefit. And so if you're stockpiling your long-term care insurance credit, you got some money over there to help you offset.
Right.
Okay, let's go back to the phones. We got Ed in Amherst. Hi, Ed. How can we help you?
Hey, first of all, I'm a long-time listener. I enjoy what you do. I just would like some clarification on the IT 229.
Yeah.
If the taxes that you pay exceeds 6% of your gross or adjusted gross income?
Adjusted gross income. On New York.
On New York, right.
New York AGI.
So it's and how is that calculated then? if it
Pardon me?
how is if your taxes exceed 6% of your AGI?
All right, so let's just do simple math, okay?
Okay.
Let's say your New York State AGI is $40,000. All right. 6% of 40,000 is 2,400, right?
Right.
So if my property taxes are $6,000, I subtract 2,400 from 6,000, and I find out that I have a $3,600 spread. I then take 16% of that, and that's what my credit's going to be. If it's not 250, then I don't get anything. But if it's if it's 250 up to 350, I would get the 350. That's the maximum credit.
Okay. All right. I think I follow it then. Thank you.
You got it?
Yeah. And stimulus.
Well, but quite frankly, I mean, I made it simple. That's for people up to 75,000. After 75,000 AGI, then there's like this other hoop you got to jump through. But I'm not going to do it on the radio. So, but I'm just going to tell you it's like if you lift your leg at 2:00 in the afternoon and shake it, we're going to give you an extra 2%. Anyway, but the thing is to see if you qualify, plain and simple, is if the spread is more than the 6%, you want to definitely look at that.
Okay. I think.
Okay.
Yeah. And there were 3 stimulus payments during 2021?
There were 2.
2.
The first, you got the $1,200 stimulus was the first one that was issued in 2020. Then there was the $600 stimulus that was issued in January of 2021, but both of those were reconciled on the 2020 tax return. And then the third stimulus, which was the $1,400 stimulus, was issued in March around St. Patty's Day. That's reconciled on the 2020
return.
Right, on this return.
Okay. All right. So just the $1,400 would be applicable to
That's correct.
21.
And if you didn't get the other 2, because maybe you didn't file or whatever, you want to make sure you do a tax return or amend a tax return so that you're in the system.
Okay.
For that year.
Thank you very much. Thanks for your help.
All right, thank you.
Take care.
I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And we got Mike from Dunkirk. Hey, Mike, how can we help you, sir?
Thank you. Last year, my father died, and he left the 3 children an IRA that was split into 3 parts.
Okay.
And what happened was, towards the end of the year, the wealth management advisor called and said, "Hey, we got to do an R&D on this." And I said, "Well, what do you advise to do?" And he said, "Well, we'll sell some mutual funds, we'll take some out of the cash account, etc." My question, though, is, I mean, I got a 1099-R on it, which I understand, how that works. But my question is, does this mean I'm going to have to look into the dreaded Schedule D because some properties were sold, or was it different because I inherited it from my dad?
All right, so you're good with the 1099-R, right?
Correct, yes, because I
Don't
see how that works.
Sorry, but before we get into the other property, don't forget, if you're taking money out and Dad was over 59 and a half, you each get that 20,000 exclusion on the New York return divided by 3. So you each get a $6,667 subtraction
Deduction.
on New York State.
So don't forget that.
And the 20,000, and my 2 siblings do not live in New York State, but
It doesn't matter.
Yep.
Oh, it doesn't matter.
Nope, you still have to divide it by 3.
Okay.
And then the other property.
All right, so then when you sold the capital asset, the question is, was it gifted to you prior to his death, or did you actually inherit it after his death?
I inherited after his death.
All right, so then the fair market value on the date of his death is what is considered to have been purchased, the property had been purchased for. So if the fair market value on the date of his death, it was $200,000, then they consider it to be as if you paid $200,000 for it, and if you sell it for $200,000, then you have no gain or loss. It's tax free.
Okay, so So if a small component of that was sold to pay for the R&D, there should be no implications then.
Did you sell stock or did you sell property?
It was in an IRA account. I don't have it right.
So it's all in an IRA.
It's all in an IRA then. That has nothing to do with the Schedule D then.
I'm sorry. Could you repeat that?
Anything inside of an IRA is handled through a 1099-R.
Correct.
Anything outside of an IRA, if it's a capital asset, goes on a Schedule D. You're saying that you liquidated more assets inside the 1099-R inside of the IRA. That does not go on a Schedule D.
Okay, because it's in an IRA.
That's correct.
Even though some of the properties in there were sold, the mutual funds or stocks.
Right,
If
because
it was in an IRA, it's in an IRA.
Okay. Good. And then the 20,000
Okay.
on the New York State, you said still I have to divide that by 3?
Yep.
Yep.
Okay.
And I've seen New York State mail letters 2.5 years later saying,
With big penalty and interest.
yep.
Okay, well, when we have your people do the taxes, I hope they'll catch that, and I'll remind them.
All right, good
Thank
enough.
you.
Thank you, sir.
Thank you very much.
All right. I'm Esther.
But it does.
It's a technicality, but the state of New York is very, very good at doing those technicalities several years after you filed, and the penalties and interest can be daunting.
Right. And it is very confusing, like you said earlier in the show, when somebody passes away and dealing with the tax return. Because as you could just see with that caller, there are lots of stuff that happened, and if we didn't dive into it, we could have given the wrong advice.
That's exactly right. Because I was assuming he was selling capital assets. As a matter of fact, I think he said he was selling capital assets. But the truth is, a capital asset inside of an IRA still is an IRA.
Right. Where, like, if Dad had the IRA and then he sold Dad's house, which was not in the IRA because
That's
it couldn't be, that would be different. That would be a Schedule D transaction.
That's right. All right, let's go back to the phones. We're going to talk to Mary. Hey, Mary, how can we help you?
How are you, Esther? Listen,
Good.
I was on Cobra last year. My store closed, so and I also had surgery. Can I claim medical expenses, or because I took the Cobra contribution, am I exempt from that?
Didn't you say you were paying for Cobra?
No, the federal government had a program last year where...
Oh, okay. So, no, you can't take an expense that you didn't pay for.
Right, but I also had surgery. Can I...
The surgery,
well, anything that you paid for, Mary, that's medically related, and necessary is going to be deductible. But if the Cobra paid for the medical procedure and you didn't write the check, then you can't take the expense.
No, the Cobra just paid for the insurance part of it.
Okay, yeah.
So your surgery, you would be able to claim.
Right. And then add all your other stuff with it. But remember, you got to reduce it by 7.5% of your adjusted gross income.
Okay. And then the other, if we sell our house, we are selling our house, we're building a house, the money towards the sale is going to go towards the new house. Is it possible to keep money for furniture, or do we have to pay taxes on that?
Okay. How long did you own property for the first property?
15 years.
Okay. Is the gain going to be, you're married?
Single.
Okay. Is the gain going to be more than $250,000?
No.
Then, Mary, all of the gain is tax-free then.
Oh, yes.
You don't have to reinvest it. You can go on a world cruise. It's tax-free.
You want to go?
Yeah, I would love to go.
Right now.
Can we go right now?
Yeah, I know, right?
Yeah.
Okay, thank you. I really appreciate it.
You're welcome, Mary. Bye-bye.
Have a good day.
We could do a radio show on cruises.
Absolutely. All right, let's go back to the phones. And again, 8030930, 8030930, star 930 on a cell phone. Oh, wait. Hi, Esther. Wait. I live in the Villages.
Of Florida, and I've always had someone in Buffalo do my taxes whenever I came back to visit. Unfortunately, he passed away last year, and I was wondering if I could be able to book an appointment to come to your office in March while I'm visiting. My question is, do I bring everything personally in my luggage, and visit you that way? Or are those some things that you could look up? I'm just not sure I know how to get it over to you via a computer. Thanks for your
Wow,
help.
that was all over the place.
Well-
All right. So, yes, you can certainly book an appointment with us, but, why not just do it over the internet with us? Or let us do it virtually. You can send up all your documents. We can mail you a sealed envelope that's tracked. You can put your documents in. You don't have to send it through the mail. And you can send it up here to Buffalo. We'll take care of it, and we'll interview you over the phone, and then you don't have to worry about putting it in your luggage, even though you're in the America's friendliest hometown, the Villages, But we can help. We can.
I was going to say, I just looked it up. If he was close to Naples, he could come.
That's true, and we have an office in Naples. If you wanted to come down from the friendliest hometown down to Naples, we can take care of it that way too. All right. Let's go to Matt, I think. Hey, Matt, how can we help you?
I have a question. My son is age 23 years old and is disabled. He receives Social Security disability.
Okay.
Last year, we took him off of our tax return, and he filed himself so that he could get the stimuluses, which I forget exactly how many or which one he did, but he
All right, if you claimed him, then he should not have gotten stimulus. It should have come through you.
No. We put him on his own tax return last year.
Oh, okay. Okay.
Yeah, so that he could claim.
Sure. Okay.
Now we're back to this year.
That's right. Back to the square one.
Status. And I'm wondering two things. One is I have not received any information from Social Security. Last year was the first year that he received it. I haven't gotten a statement from them telling me how much he did receive for the course of the year. So my question is, can I put him back on our return?
Yes. Yes. As long as you're giving over 50% of his total support. And he's on and he doesn't have other forms of earned income, correct?
No, just the disability.
Or unearned income, is it for that matter? Yeah, so you can put him back on your return. And did he get the $1,400?
Yes, he did. He got.
All right, so you're going to make sure that you don't put that on the recovery exclusion. You'll end up getting a $500 credit for him.
Okay. Now, do I need to reconcile in any way, shape, or form the Social Security disability that he did receive?
No, you don't put his Social Security on your return.
Okay.
Okay?
All right, so I can bring him back onto our return and claim
That's right. But do not put his Social Security on your return.
Got it. Very good.
Okay?
Okay, thank you.
Thank you, sir. Okay, let's see. Who's next here?
Dave.
Dave. Hey, Dave, how can we help you?
Hi, Esther. I love your show and find it helpful and interesting.
Thank you.
I sold about $4,000 worth of stock this year, and actually it's the first time I've done that. I'm trying to figure the long-term capital gain. I'm in determining the cost basis. The stock was basically given to me about 2002. And the internet records that I can find don't show too much. During that time period, it looks like the stock may have gone public around 2002 and was about $30 to $35.
May I ask who gave it to you? Was it like your dad?
Yeah, I think it may have been like a child life insurance policy that may have turned into...
I mean, you demutualized?
Excuse me?
There was a demutual...
Was it an insurance stock?
Right.
I believe it may have turned into insurance from insurance.
So if the whole demutualization thing was going on about that. All right, so...
What's the name of the company? What was the stock?
It was Prudential.
Yeah,
that was
demutualization.
Yep.
So, all right, so they came up with a amount at the time of the demutualization when it went from an insurance company to a stock company, and that, I think we can get you that information. And then all of the reinvested dividends, if you've had over the years, also increase the cost basis. And then you're going to come up with a total cost basis and then subtract that from what you sold it for. And that'll be your gain or loss. And remember, do you have a large amount of other sources of income, Dave?
I do have other sources of income, yes.
Substantial? I mean, like a $80,000 pension and $18,000 in dividends,
right?
Things like that. Are you like around six figures?
No, not around six figures. But
all right, because the maximum you're going to pay is 20% on the capital gain.
Well,
so if your gain is $20,000, it's $4,000 in taxes.
Yeah.
If you're in the 20%, if you're using the 20%.
Okay, I think I could go as zero because I'd be below the 40,000.
Okay, so in that case, you may end up with a very small amount of taxes on the federal. The state of New York will hit you up, though, just like ordinary income.
Yep.
And I took the dividend.
Did you get?
I'm trying to find it.
Chris is like feverishly thumbing away here. But what he'll look, I'd like to take another call. So he'll keep looking and he'll let you know. Okay, Dave?
And just something real quick.
Yeah.
I have the gross amount of sale. Then there was trading fees and banking wire fees.
All of that goes to basis.
Those do or don't get.
You'd use it, yes. Any expense to get rid of that stock increases the cost basis.
$27.50.
Look at that. Are we good or what? Chris is good. So $27.50 a share, right?
Yep.
That was the demutualization price.
Thank you very much.
You're welcome. Thanks for calling. I'm Esther Gilius, the tax lady from EG Tax, and I will tell you, I got a plane to catch, so I'm going to leave.
Okay.
And I'm going to let Chris finish the show.
Sure.
Until next week, I'm Esther
But I'm
Gilius, the
still
tax
here.
lady, and Chris is going to be here for the next couple minutes.
Okay, let's go to Mandy in Buffalo. Mandy, how can we help you?
Yes, I had a question on Medicare reimbursements. I am not being reimbursed separately for that expense, and I'm wondering, do I show it on the tax return, on the Social Security line where they're the separate lines?
You still have to report your gross from Social Security, okay? But you cannot deduct your Medicare from your Schedule A because you were reimbursed it.
Okay, that's what I thought.
Okay?
That was it. Simple.
Perfect.
Thank you.
Thanks, Mandy. Have a great weekend.
You too.
Okay.
Bye.
Thank you. And now we got Bob from Delavan. Hey, Bob.
Hi. Got a couple of quick questions. I made an appointment for Springville office, but I forgot to ask about the tax, the properties, village, and school tax thing.
Right.
Do I need to take my 2020 tax stuff that has gross incomes and so forth for them to figure it, or what?
Well, for the 20, are you talking about that new credit for New York State?
New credit. It's federal. Is federal too, or just New York?
No, this is just a New York credit, and if you didn't bring it in for 2021, you should bring it in and have April relook at it to see if you're eligible for that $250 to $350 credit.
Yeah. Okay, it's on the 2021.
Yep, you want to bring in your 2021 school, village, and county tax.
Yeah, nothing to do with 20, just 2000.
Nothing to do with 20. This is a brand new credit for 2021.
Yeah. Okay, and I didn't get the address when I made the appointment. I know it's on Cascade Road. She said.
In Springville, you know where Walmart is?
Yeah, definitely.
Okay. Everybody knows where Walmart is. Silly question. We're right behind the Verizon store, right in that plaza.
Yeah. Where's the Verizon store exactly? Is it near? Okay. Verizon Plaza.
Yeah, right by the old Pizza Hut.
Okay. thank you very much. I guess that's it.
Okay. Thank you, Bob.
Yeah.
And we're going to quickly go to Alex from West Seneca. Hey, Alex.
Hello, how are you?
Good. How about yourself?
Okay, can you hear me? I got two questions. Over 2021, I dibble-dabbled in Robinhood and got some stock and cryptocurrency. I don't believe that I made very much of a profit, if any profit. If anything, more of a loss. Now, will I have to pay anything if I did get any gain on that?
Well, if there was even though if there's a gain, yes. If there's a loss, it's going to help you on your tax return. But either way, you have to report it because Robinhood is reporting it to the government. And if you don't report it to them, they're going to send you a bill later on. So you definitely want to include it on your Schedule D, as in David.
Schedule D? Okay.
Yes.
Okay, and then one last question. Is there a way that you can, because I don't recall, because $1,400, you said that there was a credit last year for $1,400. I would have remembered if I would have got $1,400 and deposited it. Is there a way that you could confirm that you got that? Because I know you were in the show.
Have you been doing direct deposits of your refunds?
Yes.
Check that bank, and it was around St. Patty's Day last year, 2021. So you want to pull up your March statement from 2021, and it will say IRS EIP 3.
ERP3, okay. Okay.
And if you don't see it, then you can claim it on your return.
Oh, okay. So if I don't see it, because you were saying earlier in the show, or Esther was saying, one of you got, or we're saying that you don't want to file an amendment if you already did get it, but I don't.
Right. Because what happens if you say you didn't get it on your return, the IRS is going to hold up your refund and research it for like 6 months before you get your refund. So if you already got it, you really want to make sure you put it down that you got it so they don't hold up your money any longer than they have to.
Okay. All right. Thank you very much. You have a good rest of your day.
You too now. Thank you. Well, I'm Chris Fabian from EG Tax with Esther Gulius. Until next weekend, we'll see you then. Stay safe and stay warm. Thank you.